This is Wall Street Week. I'm David Weston, bringing you stories of capitalism. Coming to an internet near you, artificial intelligence. Will those helpful chatbots kill the search and advertising paying for all that content that you enjoy?
And liftoff of Falcon 9.
Plus, the race to make money in space. Companies are competing to launch 100,000 satellites in the next 5 years as China builds out its own space infrastructure in Latin America. And investing in Bolivia. A new regime aims to be friendly to private enterprise. But when is the right time for investors to dip their toe in the water? But we begin with the continuing conflict in Iran. Harvard professor and former IMF chief economist Ken Rogoff chronicled the U.S. dollar's rise and the beginning of its decline as a global currency in his latest book, Our Dollar, Your Problem. It turns out that it's not just oil and aluminum at risk in the Iran war. It also may be the status of the dollar. Ken, in your book, Our Dollar, Your Problem, you talk about the position of the U.S. dollar as declining gradually over time in relation to other currencies. We now have a conflict in Iran. Is that affecting that decline?
Oh, I don't think there's any question that it will affect the decline. It could go either way. It depends on how it comes out. If the U.S. comes out incredibly triumphant, there's peace in the Middle East, everyone, looks to the United States to maintain peace, that's one outcome. Another outcome where it's viewed as a strategic defeat and China gains. But, it's a step. I don't think either way it's changing a dynamic that was going to happen anyways. There are things on the outside that it influences. So it's definitely going to help China accelerate getting other countries to use it's currency, particularly for Chinese imports. For example, if China buys oil or if China buys anything, it's going to help in that dimension. But it's also affecting global debt because everybody sees a lot of need for military expending. The U.S. is the biggest debtor in the world. We lose the most when global interest rates go up. So there are pressures from the outside coming from everybody's trying to look for other options, and pressures from the inside that we're, running this big debt that is manageable if we wanted to, but there's not a lot of will to want to.
Is the strength of a currency reflective of the strength, including military strength of the country? In your book, you go back to the Armada, actually, with Queen Elizabeth I and the Spanish. Is this potentially a barometer of how the world is perceiving the relative military strength of the United States?
The military strength's a piece of being the dominant currency. And here, just to be clear, we're talking about the dollar's market share, which reached an incredible peak about 10 years ago. But also, military strength gives you the ability to affect negotiations. They can be over very unrelated things. They can have to do with how the IMF works. They can have to do with how global banking regulation works. So having the military power at the end of the day says, well, of course it matters for a lot of things. And if you're looked at as weaker, it hurts you.
And part of the protection, historically, going back to like 1974, was of the Gulf states, countries like Saudi Arabia, because of U.S. military protection. Now, as you say, it depends on how this all plays out. But if, in fact, the United States does not have a triumph of some sort over Iran, does it really undermine the confidence of the Gulf states in using the U.S. dollar?
Well, the Gulf states are a really important anchor of the U.S. dollar. And, it's interesting you picked the 1970s because it really fell in the 1970s. Europe left the dollar. That's worth remembering. And the Gulf states, when they sort of did their recycling of their petrodollars through the United States and priced oil in dollars, I think it was sort of helpful, although nevertheless, that period was down. I don't want to overstate the petrodollar. I want to be a little careful about that because oil is a very flexible price. We're all staring at Brent crude, and it's still here, and it goes here. It can move very fast. So it's a little bit like my paying with Visa or MasterCard. It matters a lot more whether goods, manufactured goods, are priced in dollars. but it's important. I mean, it fills a lot of roles. The Gulf states use dollars. Saudi is still pegged to the dollar. I don't know how long that's going to last, but they still are. And because so many of them are pegged to the dollar, rotate around the dollar, they hold more dollars. They've been very important to our business model. Not as important as China, but they've been important. And it's unclear how this is playing out. I mean, I think a lot of the Gulf states are looking at us and saying, wait, I thought you built those bases to protect us. I didn't know you built those, various military complexes in our country so we could be target practice. And are you on our side? Or are you on their side? Like, what's going on? That's been a delicate dance. I don't think we know how it comes out yet. So, China's kind of playing it cool. A lot of people say they may benefit. They might, but I just think we have to see what the end game of this is.
The Chinese might benefit. Will the yuan benefit? Because we see Iran saying we'll let oil through the Strait of Hormuz if you sell it in yuan, for example. And China certainly wants more transactions denominated in
They're
yuan.
doing quite a bit in crypto too, also, by the way. Yeah, I mean, if they get paid in dollars, we can sanction them immediately. They're putting it hostage. Why the heck should they do that? That's certainly significant. But the big thing of the Iran war in the future of the dollar is it's raised global interest rates. They were going up and up and up. So if I look at the dynamic of how I see things unfolding, it's that there's this pressures from the outside that are very slow moving, but they're happening, to have a more multipolar system. And there are problems on the inside where we're the richest country ever, but we still have trouble paying our bills and running these crazy large debts. There's no political consensus in either party. The Republicans don't want to tax anyone. The Democrats think 1% of people can pay, which doesn't add up. And so we are racing towards having a fiscal problem. And then central bank independence becomes a problem, because when you have a fiscal problem, you're kind of looking for the central bank to bail you out. And if all that's happening, that's sort of what happened in the 70s, in a way. It undermines the dollar.
So what are the metrics that people should use in figuring out where we are in the relative prominence of the dollars? What do you look at? I mean, for example, were you surprised that the dollar was not more of a safe harbor when the Iran conflict broke out?
So there are people in finance who are doing all these papers showing that the premium we used to extract on longer term debt is gone. So on short-term debt, there's still a premium to dollars. It's still the safest asset. Long-term debt, it's not there anymore. I mean, it's safer than, let's say, some African or South American countries' debt. But if you compare it to many European countries, Japan, it doesn't rank that way they used to. And so there are ways in which what we're getting out of the deal is going down. Now, we can crowd everything into short-term borrowing. And Secretary Bessent said, I think interest rates are going to go down. I'm going to borrow more short-term. Okay, but that's very risky. In fact, I think he was saying not to do that 10 years ago. And so we're losing, you see that in many measures. On the other hand, these things are very slow moving. If you do foreign exchange trading, is overwhelmingly goes through dollars. If you do currency of denomination of debt, it's overwhelmingly dollars. Of course, part of that's because more than 50% of the debt of the advanced countries is ours. More than that in global bonds, it might even be 60 or 70% is ours. So there's a lot of liquidity in it. I still remember 20 years ago, a prominent European economist getting up at a meeting and saying, today is a big day. There's more euro debt than dollar debt, which was true that day. Well, how did that work out? I think this is a slow moving thing. We're seeing it in the interest rate spreads. We're seeing it in reserves, so what countries are choosing to do. We're seeing it in actions that the Europeans and the Chinese are taking to develop independent systems. But this isn't something the private sector is just going to do. It's mostly the Chinese, the Europeans are leading the way. We are digging our, grave, so to speak, and it's all the actions of the governments. It's not something that's happening overnight.
Coming up, the content business made a long and difficult transition from print to the internet. But what happens if scrolling online is now replaced by AI? We bring you the story of another revolution in how we get our information and entertainment. This is a story about big changes on tiny screens. Since its inception, the internet has become where we turn for content we mostly access through search, and that's mostly free. But of course, it's not really free. When we searched on platforms like Google, we were directed to web pages created by publishers who got paid for all those ads we spent time looking at. Now, all that is changing. And as AI becomes the new gateway to the web, it's transforming the economics of the internet.
We believe the high water mark for internet traffic, that was sent out from social media and search and AI tools, which are quite nascent at the time, was 2022. Essentially, over the last 4 years, those numbers have been dropping.
Rand Fishkin is an author and entrepreneur who specializes in online search, the main way that most of us interact with the web.
I do a lot of research with clickstream data, which essentially looks at devices and what they visit and don't visit. Whereas in 2011, Google was sending north of 70% of all searches to a third-party website, right? A website not owned or controlled by Google. And today that number is in the mid-40s and falling. That clearly indicates this zero-click trend.
Zero-click. It's a term for an online search result that doesn't lead to any other web pages. That can be good news for users if their question has been answered quickly and correctly. No need to spend time scrolling through all that text and pages of ads. But if you are a publisher counting on that click to bring traffic to your website and to sell those ads, it's very bad news, which means the creators of all that web content have to rethink the game.
Long before AI, Google started disintermediating content providers by answering questions right in the search results. You search for the Met score, the score's right at the top. And AI just enhanced their ability to do this.
For an idea of just how big this change is for Google itself, here's the company's head of search talking about incorporating AI just last month.
Now we're entering the next chapter of Google Search, where incredible AI features aren't just in search. Google Search is AI search, through and through. Now, this is the biggest upgrade to our iconic search box since its debut, over 25 years ago.
The problem is that most people don't click on the links.
Caitlin Petrie is author of All the News That's Fit to Click and a professor at Rutgers who studies the way algorithms shape online media.
News sites that were counting on referrals from Google for their traffic, for their ad revenue, to draw maybe subscribers who might come to the site, get interested, and then subscribe, are now seeing, in some cases, very dramatic decreases in the traffic that they're getting from Google.
The move from print to the internet, many people think, actually eliminated some news sources. A lot of local newspapers, for example, were eliminated, partly because of the business model challenge, the revenue challenge. Do we face a risk of that with AI, that we will eliminate even further sources?
I think we do. I think it's a major concern.
It was really revealing. Perhaps nobody in the world has a better view of these changes and what they mean for online content creators than Neil Vogel.
What happened was our audience, right, and where we reach half of America each month, our audience on the internet was 75% from Google search, 2022. Maybe a little bit more, maybe a little bit less, but ballpark that. That is now 25% of our audience.
Vogel is CEO of People Inc., the largest online and print publisher in America. It reaches 175 million people each month. with dozens of publications whose names you know well.
Better Homes and Gardens, People, Entertainment Weekly, Travel and Leisure, Food and Wine. And we put all of these brands together because we believed we understood how to run these classic heritage brands on the internet. And we've been proven right.
Although Vogel has had a front row seat to the collapse in search traffic that AI has ushered in, he also told us something surprising. His business is booming.
We're very profitable, and we're defying the narrative around publishing that is publishers can't succeed in this world, and we're succeeding. We feel really good and really optimistic about the future of media.
Back in the day, before there even was an internet, believe it or not, there was a time. If you look at a publisher, newspaper, magazine, their revenue came from two sources, subscription and advertising. What's your revenue model?
If you look at the internet, that is where we thrive. That is our bread and butter. 90% of our profitability comes from our internet and our online presence. That is very much advertising, but it's also lots of other things.
Those other things include deals and branded products. But, Vogel says, they've also got a new revenue stream.
We license content to LLMs and AI engines. We sat with Sam Altman at OpenAI right before they could launch the first commercial LLM. This is the fall of 2022. And we saw this LLM and we saw what it could do. And we were like, uh-oh, like the world is going to be different from here. And there's moments in your life when you know the world's going to be different. Like you have your first kid or the Philadelphia Eagles win the Super Bowl and you know that like your world's going to be different from there. This was one of those moments. This was like the business version of that moment. And we took a look at this and our first reaction is, thank God we have brands. Because what we knew was this was going to be a new paradigm in media. And we knew there were going to be risks and we knew there were going to be opportunities. And we made the bet and had the thesis that says, if you have these intangible assets that really, really mean something to people, you have something that is going to increase in value in an artificial era. And starting in 22 and 23, we started to build other ways to distribute our brands. TikTok, Instagram, YouTube, our own emails, product licensing, all of these things we did. And cut to today, 5 years later, we've made 10 straight quarters on Wall Street. We're growing in an area where most publishers are struggling. And we did it because we have these amazing brands that can live in all of these places. And our aggregate audience size is multiples what it was when we started here.
You mentioned that you do have licensing arrangements with some of the LLMs,
yes,
large language models. How does that work for you? Is it real money?
So it's real money. It's material for us. I think we made a decision, maybe it's right, maybe it's wrong. So far, I think it's right, that we wanted a seat at the table. The important thing to understand and realize is AI needs three things. It needs power, which has been a lot of talk about power. It needs a model. It's been a lot of talk about models. And it needs inputs. We are the inputs. We are the training of the models. Now, we believe, and I think if you talk to any of these AI professionals believe, the internet's been crawled. All the data in the world is already in the models. So the value should accrue to those of us that are still making substantial amounts of new things that are needed for the search use case, which is a very big use case, and are needed for all the corporate clients that want to use LLMs for their stuff. So it could be something simple as we have 50 new recipes with avocados in them, and avocados are important to, I can tell you every single thing Kim Kardashian did yesterday, but these are things that are very valuable, these pieces of data. The other thing we did, which is really important here, is part of having a seat at the table is we wanted to control our own destiny. Last summer in July, we made a decision and we partnered with a group called Cloudflare to block every AI crawler you could possibly block. So you cannot get access to our content unless you pay us for it.
And given your model to license the training using your content to an LLM, is basically found money, right? It's not taking away from your other business because that's based on brand?
I mean, so it's interesting. Is it, it's funny, we have this conversation all the time. And the answer we always come back to is cash is cash. It would be amazing if we could make money the way we made money 3 or 4 years ago. It'd be super fun. I'd have a lot more free time, but I don't. And we have to work hard. So it is what it is.
For a publisher with strong, well-established brands, even the uncertain future with AI may be bright. But for smaller publishers, and for the web as a whole, the outlook may not be as encouraging. Potentially, in the longer run. What could this mean for the internet itself? because the internet really has thrived on very rich production of content. If content providers don't get paid for that, sooner or later there's not going to be as much content.
Yeah, this death spiral that you're describing has been something that people have theorized over the last 3 or 4 years with no discernible solution. I'm going to tell you what I think is the most likely scenario, but it's also the most tragic one, which is that in a few years, AI tools find themselves unable to get enough content to train on, whether that's video or text or audio, long form, short form, and they decide to build their own publishing departments. And in years to come, a decade, 2 decades from now, it would not surprise me if OpenAI or Anthropic looked a lot like TikTok, where they have a creator fund and they pay creators a certain amount based on the amount of traffic, page views, and value to the training set that these creators provide. And so they're contract employing these creators, and we get an AI-shaped internet, right? An internet that is built not only for, but by AI tools. That seems quite probable.
I think that is something that if I worked at an AI company, I would really be thinking about, because if the traffic drops so significantly that we see even more jobs in journalism be lost, we see even more, especially local outlets, but a lot of news outlets shutter themselves because they can't stay afloat, that diminishes the amount of content that these LLMs can train on too, right? So this is something that I think we should all be concerned about, not just journalists, but also those who work at AI companies. Anyone who cares about the future of democracy should be thinking about this right now.
Tell me how broadly, apart from people, beyond people, how do you think generative AI is going to change the nature of the internet, the content on the internet? What does it mean?
So we can end up being fairly myopic around here and looking at our own use case. I am, and I have to be, I'm like a crazy optimistic person. And I'm very optimistic about AI for us, right? The risk for AI for us is already out. It's already killed our biggest piece of traffic from 5 years ago, but we've built something even better over here that we use AI to do more of. Like we are today, we make about 50% more content than we made when this whole process started for roughly the same cost, and humans make every single thing you read and see. Because we've been able to use AI in the background to streamline so many processes. If you look at it as an opportunity, it's incredible for us. And we have no choice but to look at it that way. If we look at it any other way, it's too scary. And it's sort of like riding a bike. Don't look down, look towards the horizon, and you'll be fine.
Since we talked with Neil Vogel, People Inc.'s parent company made an offer to buy the part of MGM it doesn't already own. In making the bid, Chairman Barry Diller emphasized the value of what he called real-world assets that AI cannot easily replicate, pursuing a part of the media world very different from the online content brands that Vogel continues to build. Up next, we've come a long way from Cape Canaveral. Today, there's a booming business in space launches, which means a long waiting list for satellites trying to get into orbit. And the latest opportunity may lie 1,000 miles south of Florida, in the Dominican Republic. This is a story about making money 22,000 miles up, meeting a commercial need for tens of thousands of satellites to be launched by 2030. There is a race on to get all those satellites into orbit, but also a race with China, which has already built a range of satellite ground stations in Latin America, something that's gotten the attention of the U.S. government.
About 45 minutes on a helicopter flight. It's probably about 4 or 5 hours driving.
In the western part of the Dominican Republic, on the border with Haiti, lies Pedernales, a quiet coastal province that will soon be home to the country's first spaceport, and what is slated to be the first U.S.-owned commercial spaceport in Latin America.
If they were to identify this region as ideal for commercial space, it'd be essentially the Straits of Hormuz for space.
When we talk about the Strait of Hormuz, we think of all that oil and fertilizer and aluminum trying to get through a narrow sea channel. When it comes to space, it's satellites, And the choke point isn't a sea passage, but launch pads that we simply don't have enough of. How many pads are you going to have here?
4.
4 pads here.
Yeah.
Burton Catledge is a former Air Force colonel who founded aerospace company Launch on Demand in 2018.
The amount of support that they came back with was amazing.
He's now developing a $600 million commercial spaceport in this remote part of the Dominican Republic.
The ecosystem at Cape Canaveral more or less has grown out of ad hoc. Okay, it was not necessarily built with the idea for the commercial space industry. The entire market has changed. You know, the space industry is something on the order of, last time I checked, it was like $650 billion. It's supposed to be over $1 trillion by 2030, maybe $1.5 trillion, and some people are even saying that's pretty low.
To relieve the bottleneck in launching the growing number of satellites we need, the U.S. has to have more spaceports, creating a business opportunity for companies like Launch on Demand. Right now, there are over a dozen U.S. spaceports across the country, and just one internationally, Rocket Lab's launch site in New Zealand.
I think the United States, from the space economy perspective, is in a position of extreme opportunity, and they are in a growth phase.
Ryan Bruckart is a senior partner at McKinsey, who focuses on global aerospace, defense, and space companies.
I think the infrastructure in the U.S. is becoming a bit stretched, right? If you look at our launch sites, we're launching, every day or a couple times a day from some of these launch sites. There's a huge backlog of, U.S. companies looking to launch things into space and to be able to accomplish their mission and get the return that their investors are looking for.
Right now, I've heard that it's about 3-year waiting list to get a satellite on orbit.
What accounts for that demand ramping up so dramatically, and do you expect it's going to continue to increase that much?
Well, in order to have global coverage of the entire Earth, you have to have a lot of satellites. Right now, there's about 14,000 satellites in orbit. The FCC tracks all the number of satellites that are going to be submitted, and they're looking at over 100,000 satellites by 2030. So if we got 14,000 satellites and it's 2026 already, and we have to launch 100,000 satellites by 2030, that's a lot of launches that have to happen between now and then.
That may explain the need for more launch sites, but where?
The goal for a rocket is to get to space in the most efficient and effective way possible. And engineers spend hundreds of millions of dollars trying to finesse what does that efficiency look like. But eventually it comes down to 2 things. How much fuel can I put on the rocket, and how much mass can I put on top of the lift? So they're always playing with that equation. Well, the geography has an important part in this, because in order to achieve escape velocity, a rocket has to achieve 17,500 miles per hour. And the Earth, closer to the equator, spins faster than it does at the poles. What that translates into is you could put more satellites up with less of a smaller rocket. And so the goal of most spaceports is to try and get to as close to the equator as possible.
But why does it take me to Dominican Republic?
So what we ended up doing about 3 years ago was doing a technical feasibility study. We looked at everything we could possibly look at. But as we did our analysis, it started shifting to Pedernales, which has a relatively low population. And because it's on the coastline and because people don't live in the water, we have almost a straight shot to orbit without hazarding the public.
So if something goes wrong, it goes in the ocean.
That's right. So that's why a lot of our spaceports are built next to the coast, is not necessarily because of the water, it's because of the low population. It's not really about whether the rocket explodes or whether the rocket gets to orbit. It's all about public safety. Safety
is no small concern in the new space race, as we saw just last month when Jeff Bezos' Blue Origin rocket test blew up in spectacular fashion.
And liftoff.
Along with the expected $1 trillion IPO of Elon Musk's SpaceX, it's a reminder of just how public the failures and successes can be in this business, and how big the players are.
The pad will be 2 miles to the coast.
That's one reason that Burton would rather work with them than against them. You are, though, competitive with SpaceX, right?
Most of the feedback that we have gotten from all the commercial operators is they would like the ground infrastructure to be more responsive, to be more not like we launch on this day, we launch on readiness. And right now, the infrastructure and the processes are not designed that way. So right now, statutorily, the Office of Commercial Space has 6 months to review it and give you a decision. We're going to give you a license in 45 days. That's very attractive. We don't look at ourselves as competitors to the rocket customers. We look at us as enablers.
What's the attraction for investors, and what's been your experience so far on people stepping up?
There is a large appetite right now for space. This is kind of like the early internet age, if you will. The problem is there's not very many investment opportunities or good investment opportunities to get into space. The first phase of the spaceport is going to be about $600 million of investment. The response that we've gotten has been really quite significant.
As Launch on Demand prepares to break ground later this year, a larger race is already underway in Latin America. Space infrastructure has become a new front in the U.S.-China rivalry.
China is aggressively making investments in our hemisphere, particularly in Latin and South America. Also, partnerships that they have made with Caribbean nations to have aerospace applications, satellite demonstrations, civilian applications, also with military application components to it.
A recent report from the Select Committee on the Chinese Communist Party warned about China's growing space footprint in the region, including more than 10 satellite tracking stations. Congresswoman Haley Stevens of Michigan is a member of the committee.
This is a call to double down on the way our system works, and so we don't want to be ceding ground to China. We don't want to see them continuing to eat our lunch with our neighbors, and we can win this race.
I guess you could look at it as a marathon or maybe an ultra marathon, but I don't see an end here. There is not a clear finish line.
Carrie Bingen is a director of CSIS's Aerospace Security Project.
Well, I thought what was really interesting in the decades that we were competing against the Soviet Union, so much of what was happening in space, it was fueled by government. I think what you're seeing now, which really sets this current era apart, is so much of what's happening in space is commercial. Over 80% of the satellites on orbit today are commercial systems. A lot from the United States, SpaceX, Starlink, but many other countries are now players in space. The technology is much more distributed across the globe. Launch costs are a lot cheaper, so any country or even entity can put something in orbit. And much of that is now fueled by private capital, not just taxpayer dollars. China has ambitions to be the world's space power. Their presence and their capabilities in Latin America are part of that strategy. They want access, they want influence. They want to be able to band together with these countries in bodies like the United Nations to start shaping where the standards are.
We started this program well before people realized that China was, very interested in taking over real estate in Latin America. As we have gotten the Trump administration and President Abinader's administration together, they are aligned on what has been called, the pivot to the Western Hemisphere. So I would call the spaceport more of an artifact of the decision to pivot to the Western Hemisphere rather than, anything else. And we emphasize this is run by a U.S. company that is designed to be commercial, that is complementary, not competitive, with the spaceports in the United States. And we work very, very hard to make sure that they understand we're a friend, not a foe. And so much so that when we have talked to the President Abinader, we said we want to adopt the U.S. safety standards for launch and reentry. And he agreed. And so if you're a customer that launches from the United States, the standard will be the same if you launch from the Dominican Republic.
We have holes. We never thought that missiles would be launched across the southern hemisphere, so we did not put a lot of radars down in South America or in Africa, for example. But we're realizing we need to have coverage of everything that's happening in orbit. We're seeing China, we're seeing Russia maneuver satellites much more frequently. Are they benign or do they have a hidden weapon? We don't know, but we know that they're testing these kind of capabilities. And so you need to be able to monitor that.
Are there restrictions on who can use your spaceport?
We want to stay in line with U.S. foreign policy. And what do I mean by that? So even though I'm a U.S. company operating in Dominican Republic, I need to make sure that my host country, the U.S. in this case, is aligned with what I'm doing. So if I sort of, went kind of off the beaten path, I would essentially be cutting myself up from the largest commercial market in the world, which doesn't make much sense.
Launch on Demand's being aligned with the U.S. government on the geopolitics of space infrastructure in Latin America is important to Catledge. But make no mistake, at its heart, this U.S. spaceport company is a business, one that Catledge believes will be a good one.
So we estimate that by about the 10-year point after we hit full operations, we'll be generating about $8 billion. And so this will be the first private revenue-generating spaceport in the world. And the reason why is because we're leveraging all the technology that's been invented. We're bringing that here.
Coming up, from the Dominican Republic to Bolivia, for a look at another Latin American country chasing U.S. investment, with the president trying to shake things up. This is a story of rebranding a country. Rodrigo Paz was elected president of Bolivia in November, marking a major shift for the country following 2 decades of socialist rule. Paz has a mandate of economic reform, closer relations with the United States, and increased foreign investment. But as our colleague David Gura found out, ideas and execution are sometimes very different things.
The Salar de Uyuni in Bolivia is the country's crown jewel. It's a sprawling salt flat on the Andean Altiplano. So large, it's visible from space.
We are at 3,650 meters above sea level, my friend.
Very high.
Very high.
Bolivia's economy benefits from the tourists who flock to the Salar from all over the world. But what the country's leadership is banking on is what's underneath this snow-like layer of salt.
So the lithium mining just down on the south. Okay. The idea of the government was like do some manufacturing, batteries or electric cars, things like that. But you know, it takes a long time, of course. And also we need some technology from outside, you know.
We're standing on top of one of the largest lithium resources in the world. And President Rodrigo Paz says if the country can develop these reserves, it will transform Bolivia's struggling economy, improving the lives of some 12 million Bolivians.
Perú, Bolivia y Chile son la mayor concentración de minerales en el mundo. Perú mueve 50.000 millones de dólares al año. Chile mueve 65.000 millones de dólares al año. Bolivia es la que mayor concentración de minerales tiene y solo movemos al año 6.000 millones. La pregunta es, ¿por qué queremos ser pobres?
After he was elected last October, President Paz signaled Bolivia is open for business. But as we discovered, there is a disconnect between his rhetoric and the realities on the ground. We arrived in La Paz to sit down with the president as violent protests erupted across the country, shut down parts of the city. We got the go-ahead to climb through barricades, part of a police perimeter that protected Bolivia's parliament building and presidential palace. We were told to wait in a cafe on a mostly empty plaza. And as the hours ticked by, we could hear protesters just a few blocks away throwing dynamite. Tear gas hung in the air. President Paz, we learned, was locked in tense negotiations. Just before midnight, we got word from one of his advisors the president would have to postpone our interview. 1 week later, we finally got our chance to talk with him.
It's been a busy week.
3 weeks.
3 weeks. Many of these protesters are calling on you to resign, to step down, and I'm wondering if there's a point at which that will become something that you would consider.
De aquí a 5 años, cuando finalicemos la gestión, Bolivia será un país avanzado sobre las bases de una modernidad necesaria en nuevas instituciones, una lucha frontal contra la corrupción, un déficit fiscal controlado, una opción clara de crecimiento de una economía abierta, con leyes claras, pero además un país donde las diferencias raciales, las diferencias regionales, las diferencias culturales no sean usadas para generar conflictos políticos, donde espero dejar un gobierno de participación plural.
At a precarious moment for his presidency, Rodrigo Paz has gotten public support from the Trump administration. Secretary of State Marco Rubio said the United States stands squarely in support of Bolivia's government. Trump and his team have embraced Paz's new vision for Bolivia as they've welcomed wins by other center-right politicians in Latin America.
Me reuní con el presidente Trump. Hay una relación sobre la visión geopolítica y geoeconómica en el ámbito continental. La visión de Bolivia es muy clara, es pragmática. Todo aquello que sea funcional para el desarrollo de nuestra economía, de la economía de la gente, estaremos sentados para poder colaborar y ser parte de una visión global.
I think that investors in general should have the patience to follow the situation and see, how well he pulls it off.
Hans Humes has spent his career investing in frontier markets. He's the chairman and CEO of Greylock Capital.
And the markets generally give a pretty positive tailwind when a right-of-center government comes in. So getting the enthusiasm, putting it out there, saying we're open for investment, great. And then tapping the markets when they did, raising $1 billion, I think, it was a good signal. Everybody knows the Bolivia story. It's an incredibly, commodity-wise, it's kind of hard not to see it as a really easy place to make money. It's just the ethnic tensions there that have always existed. And the fact that they have a tradition of going out in the streets, there's been a lot of turnover of governments. And as we're seeing now, it's pretty easy to choke the economy.
Doing business in Bolivia has not been easy, and there's been talk of harnessing its lithium for decades. Today, a lithium plant owned by the state is running at just 15% of capacity, and contracts that Chinese and Russian companies signed with Paz's predecessor haven't been ratified by Bolivia's Congress. In the near term, Bolivia wants to boost tourism as a source of revenue, but the longer-term vision is to do more with its minerals.
The country's never been closed for business, right? There's always been foreign investors coming in, and there's always been the ability to do business. But there was always difficulties with the administration.
Jorge Nchauste is a senior partner at the law firm Dentons, based in La Paz, and he spends a lot of his time working with foreign investors on deals involving Bolivia's natural resources.
Foreign investors are a little weary and concerned, right, that their rights won't be respected, right, and they won't be able to carry out the project in the terms that they want. One of the main things in some strategic sectors was that you needed to be in an agreement with the government. And to the extent that you weren't able to have a security that the government was going to actually, comply with their side of the agreement, that was a complicated situation. If the government had too much of a say, right, and you were not in a position to, make your rights upheld, then of course that gives everyone pause. The fact that Bolivia left the ICSID convention and was reluctant to enter into international arbitration agreements, that gave a lot of investors pause.
What needs to happen over the course of the next year? President Paz has a 5-year term, but for Bolivia to get on track in the way that he wants it to, what needs to happen in a year's time?
They need to see results of some sort, right? So some of those results have already been seen, right? We need to stabilize the economy.
To do that, Bolivia has turned to the International Monetary Fund. It's in negotiations for a $3 billion package that Paz says would go towards social organizations, entrepreneurship, and economic development. But just 6 months into President Paz's term, many Bolivians seem to be running out of patience. Protests have followed his decision to cut fuel subsidies, and with inflation at 14% as recently as April, the pressure has mounted. But the calls for Paz to step down go beyond economics. Some opposition groups have sought to force him from office entirely, and the blockades they've erected are now causing shortages of food, gasoline, and medical supplies.
Do you see any missteps, things he could have done differently or should have done differently?
Pulling away subsidies, it's the right thing to do. It's a wrong thing to do if you don't manage it well. One of the problems that you see in a lot of these countries, whether it's Ecuador or Bolivia, is you know, you want to head off people going into the street. So maybe he should have tried to have a bit of a negotiation on the timing of removing subsidies, slow walking it. He probably should have recognized that stylistically he might have wanted to do a Malay, but practically speaking, he didn't have, you know, he didn't have the national support that Malay did.
I imagine there are investors outside the country who are watching what's unfolding in Bolivia and wondering how much has changed. If it's still status quo, that there are protests and demonstrations and overarching uncertainty. What would you say to those investors or those prospective investors about what Bolivia is like today and how welcoming Bolivia is of outside investment?
Nos prometieron 20 años de ser una posible Suiza. Esa fue la promesa hace 20 años. 20 años después dejaron una economía quebrada, sin sus recursos naturales como los hidrocarburos para poder exportar. Tenemos muchos hidrocarburos, pero nos dejaron sin las inversiones adecuadas y sin la seguridad para que aquellos que quieran invertir en Bolivia tengan normas, leyes claras. La transición para generar una Bolivia segura en la inversión es a través de normas y leyes.
President Paz is pushing for changes to Bolivia's legal framework to make the country more business-friendly. He's still making his pitch to the Bolivian people and also to outside investors. The country just held its first dollar-denominated bond sale in almost 5 years.
What would it take for you personally to invest in Bolivia at this point in time?
We own some of the bonds. I mean, we're already in there. We're bond guys. I'm not going to buy a lithium mine. I have friends who might be, I just wouldn't know what to do with it. But yeah, I think the risk reward now, it's tricky. I'm not going to put 50% of the portfolio in it, but I think it's a good risk return. We've had a lot of bad headlines. I'm willing to keep the focus there because the macro story is a good one.
Next, what a spaceport could mean for the people in an underdeveloped section of the Dominican Republic. When Launch on Demand went looking for the place to put its new spaceport, the Dominican Republic fit the bill in terms of geography and population density. But it also turned out to be a section of the country badly in need of development, which the new facility is designed to provide.
Este mes firmamos un acuerdo histórico con la empresa estadounidense Launch on Demand, LOD Holding, para el desarrollo de un puerto espacial comercial en Oviedo, en Pedernales.
When I saw that the president was doing something in Oviedo, which was my town, I was like, this is a dream. I never in my life imagined Oviedo to be like putting a map.
Launch on Demand wants to make Oviedo into a hub for commercial spaceflight. But first, the company has to build almost everything a spaceport needs from the ground up.
So this is the mayor of Oviedo, and so he's been working with us on all the collaboration of getting everybody together. So everything that you're going to see here, his and his staff have put it together for us. Muchas gracias.
El puerto espacial es un proyecto de vital importancia para nuestra zona. Eso va a ayudar en la economía, va a ayudar en la educación, va a poner al municipio de Oviedo, la provincia de Pedernales, la región y el país a nivel mundial en los ojos. Y de verdad que es un proyecto que le agradecemos al señor presidente Luis Abinader que lo haya puesto a la luz, pero es un proyecto de mucha importancia que le da importancia a nuestra población, a nuestro pueblo.
This is the new, going to be the Silicon Valley of the Caribbean. It's going to have the power, it's going to have the talent, it's going to have the geography, and those companies that are forward enough thinking from the U.S. side are saying, wait a second, you have a surplus of power, you have land that is available, and your regulatory regime can help us do this.
Catledge sees the potential in the country.
So we have, what we are proposing is a 200 megawatt power plant.
power tends to be a very big commodity when it comes to the space industry, and nothing is bigger than how you fuel the rocket. There's other use cases for the energy, but the biggest one is to make sure that you could fuel the rocket uninterrupted without any problems. And also, if let's say they're fueling 2 or 3 rockets at the same time, we have plenty of power in order to do both.
So besides power, besides the place to keep the satellites until they're ready to go up, what else will be on this site?
So, interestingly enough, water is a huge problem for space launches. So the system is called a deluge system. So if you look at a launch pad, you'll often see a water tower next to it. And what happens is whenever the rocket is about to lift off or is lifting off, there's huge gallons of water pushed onto the rocket and onto the infrastructure because it dampens the sound. It's not because of a fire, it's because it dampens the sound, because the sound of the rocket lifting off is so extreme it would shake the rocket apart. And so the water, the deluge system, dampens the sound. So once that water is used after the launch, then it's recycled and it's treated. And so when it's treated, then they have to decide what to do with it. And so we need to have ability to get potable water, so we need a desalination. We also have to have a water treatment facility because after it's done, we're going to treat it, and then we can use it for agricultural purposes. We can use it for lots of variety of purposes for the region. But water is something that we need to get in huge commodities, and basically, when Cape Canaveral was developed, they didn't size the water treatment facility for the size of rockets that are actually there. And so there's a real problem with water treatment.
When you're fully up and running, how many people will work on this site?
I would venture probably about 4,000 or 5,000.
Where are they going to live?
So right now, if you go near Cabo Rojo, which is about 20 miles here, there are resorts being built, high-end resorts, because there is going to be an extension, essentially, of what's going on in Punta Cana. So even since our announcement, the real estate prices have gone up and up and up here because they're like, well, we're going to need this and we're going to need this. So we will have to build the infrastructure for people to live in.
Subject to the retraining or the fine-tuning, does Dominican Republic have enough skilled workers to be able to do the sort of project you're talking about? Oh. In addition, by the way, to the hotels and the seaport and the airport?
Yes. The answer is no. And I think that's anywhere you go. This country has been mainly focused on tourism, and as a result, that's where their revenue has been coming. But as they begin to transition and diversify away from tourism will always be an important part of this. But this is really diversification. Now, what I have seen in the last, couple of years is the motivation and the education is there. It really is. That's the hardest thing to sort of capture is, are you interested in this? Is this the topic? Because if you're interested in the topic, I can teach you. So it is not scaled right now where it needs to be.
But has there been any resistance or questioning from the people who live here, or are there so few people living here?
Oh, we had a number of questions. So once the announcement was made in March about this, we started seeing, what were the questions coming to us? Some of it was, well, we don't understand what this project means. Mm-hmm. And so we came here and we did a town hall, almost probably the third day after President Abinader announced it. And so we explained, look, they said, you don't have power and water. We said, yes, we know. We're going to build power and water. And they said, okay, well, we don't have the talent. And I said, yep, my next stop is we're going to sign an agreement with INTEC, which is the university.
Well, tell us about INTEC.
Sure. INTEC is a technical university, one of the most premier universities in the Dominican Republic. They produce some of the most talented engineers in the world, in the Caribbean, really. And when we discussed where we were going to get the talent pool from, we wanted to go to the university where that talent was. They have mechanical, electrical, aerospace, all these other engineering and technical disciplines that we could leverage. And so we met with the provost and said, listen, we can help you train this workforce. They took it one step further. They said, we're not just going to let you train it, we're going to create a minor. So students can actually participate and learn about the space industry, because after a while, it's going to be Dominicans on console. It's going to be Dominicans that's going to be running the spaceport. We're going to help start it. We're going to help set it, design it, fund it, keep it going. But ultimately, it's going to be the Dominican Republic and primarily the youth of the Dominican Republic that are going to be operating this.
Lorena Rosario is among the early Dominican hires working with Launch on Demand. For Rosario, who was born in the Dominican Republic and now lives in Miami, the announcement was a call to come home.
As soon as I saw the interview with President Abinader, I jumped on it and reached out, and and the rest of it is going to be history.
So as you look forward to this being developed and your launch pad being somewhere right around here, what are the issues that you have to address? What are your priorities?
Right now, our main priority will be the regulation, helping the government and also the IDAC create all those regulations. And as Mr. Burton mentioned, the training of the staff and just making this whole project, work together.
For a town long described as forgotten, the promise of a spaceport is not only about rockets. It is about whether Oviedo's next generation can imagine a future closer to home, and whether the project can deliver the opportunities local residents hope it will. How do you think the lives of the people who live here will change?
It's going to change a lot. It's going to change a lot because people here don't have a good income. They live with $150 a month for a family of 4. So it's going to really change their lives. They're going to have more opportunities. The kids are going to have dreams of becoming an astronaut or, try to work with Spaceport, try to change who they envision. Usually here, kids don't really know what to dream for. But Launch Demand brought a dream to Oviedo. Oviedo is going to change because of Launch Demand.
That does it for us here at Wall Street Week. I'm David Weston. See you next week for more stories of capitalism.